In 2018, I pointed out when Bitcoin was about 10,000, it was going to drop a zero. I was 70% right, 30% wrong because it went down to 3,000. I'm saying the same thing now. I think it can go back to 10,000. I mean, that includes everything going lower, unfortunately, means the stock market. It's just normal. The key difference is from back then, there was only a few thousand cryptocurrencies. Now there's multi-millions, and we've had that pile in from ETFs, the Trump administration kicking in and accelerating it, and it's classic peak bull market stuff I remember seeing in 1999. So in the previous segment, Paul mentioned the VIX at 25. You look at that VIX 200-day moving average, it's a bull flag. Right now it's averaging about 19 and a half. And the key fact is 120-day realized volatility in S&P 500 is around 10%. If we end the year there, not only is it half the VIX, but it'll be the lowest since 2017. So I'm expecting this Bitcoin plunge to trickle down to the stock market, volatility to pick up, maybe just get to its average around 16%, and the whole thing tilts lower into the year end. I don't know what stops it at this point.
Wow. Okay, interesting. Is there a technical support level in Bitcoin that we should keep our eye on? I mean, that $100,000 level kind of held there for a while, but we've obviously down here at 92,000 have blown past that.
Well, that's now key resistance, 100,000. It was my key inflection point starting in 2020 when I was calling for it. Yeah, I was early and I was wrong for a little while, but the key support was right now is around 90. It's stuck between 90 and 100,000. I think eventually it breaks down and heads towards 50. On an annual chart, 50 is normal. The key thing is you get the sharpest rallies in bear markets. The 200-day moving average has rolled over. MicroStrategy's 200-day moving average rolled over in August. And so maybe we'll get a little bounce, maybe get to 100,000, but I think it's all about responsive sellers. And the key thing to point out is the Bloomberg Galaxy Crypto Index, as of yesterday, was down 14% on the year after rallying about a third. If the stock market just follows that, which I think it might, all the dominoes trickle lower. And the key indication for me for all this is gold grabbing alpha this year. And when gold's alpha, something's wrong.
I'm glad you bring up the Bloomberg Galaxy Crypto Index because Bitcoin, we know, gave up its gain for 2025, but it hasn't really dipped into the red. Mike, how much does leverage play into all of this? We know that some traders borrowed money to boost the size of their positions. And so, you know, when they need to meet margin calls, there might be a lot of forced selling. There's massive unwinds.
Actually, you nailed it, Scarlett. You don't really see the leverage until the tide goes out, as Mr. Buffett said. And October 10th marked the first day we saw the leverage in the market. We also noted that one of the biggest holders of cryptocurrencies and the dependent is the Trump administration officials. A lot of traditional crypto people did not like that. So what we're finding out right now, this is a very much leverage-driven market, a lot of algos, but it's normal that happens in a market that goes up a lot, and now we're getting the purge. The key thing is it's the time of year you usually hit stops if you've had profits and certainly if you get losses, and now I'm afraid it's going to accelerate into year end. We don't have a lot of days left. Volatility is just starting to pick up, and the stock market might be just starting to roll over. So happy Thanksgiving. I hope it does better, but I'm afraid things are going to be more like, yeah, may as well preserve whatever profits you got left.